Hello and namaskar everyone. Welcome to our commodity audiocast where we bring you the latest updates and insights from the world of commodities. I'm your host and guide Ravindra Rao from Kotak Securities Commodity Research Desk. And today we will dive into the key events and trends that will set a tone for commodity futures market in this week. The broad-based rally in commodities that started after cooling CPI and core CPI in US took a pause after global markets turned little cautious amid mixed data print in the previous week. The dollar, which hit 15-month lows of 99.57 earlier in the previous week, recovered from an unexpected decline in US jobless claims, once again boosting rate hike bets. On the other hand, housing data turned out lackluster with housing starts, building permits, and existing home sales all missing estimates in June. The greenback also received support from cooler than expected UK inflation, dovish remarks from Bank of Japan governor and European Central Bank official. Traders are heading into this week with major central bank meetings lined up. Although Fed is widely expected to announce a 25 basis point rate hike, markets may cautiously watch US advanced GDP and core PCE data. On the price front, dollar index moved very close to the support of 99.40, and it has recovered. It has once again moved above the 100.80 mark, which was the support turned resistance. But we need to see how this week's momentum shapes up, because if it closes this week, if it closes above 101.18 or 101.20, which was the last week's high, then the bulls might again get strength. If not, then we expect it to trade in a sideways zone. And if it again closes below 100.80 or 100.70, then the bears might this time target 98.26 on the lower side. On the commodities front, most commodities have seen a pullback last week from higher levels owing to rebound in dollar. COMEX gold surged to 6-week high of $1989.8 per troy ounce, in line with dollar weakness, decline in US treasury yields, and fresh geopolitical tensions between Russia and Ukraine. Similarly, silver witnessed an uptick to $25.48 per troy ounce, supported by prospects of sooner than expected peak in Fed funds rate. But the recovery in dollar above the resistance of 101 reversed the gains in precious metals. This will be a busy week, which might keep precious metals volatile as traders might take cues from Fed's forward guidance, US advanced GDP, and core PCE data. Additionally, inflation rates for Germany, France, Spain, and Australia, uh, along with coupled with flash manufacturing PMIs around the globe, would also be in the focus. On the price action front, COMEX gold has not sustained above 1980 1984 zone, and the price have slightly moved lower. Support remains at 1930 and 1940, which was the earlier resistance, and now it has turned into a support. So we expect the price to trade between 1980 to 1940 zones. If there are any surprises from the Fed or from the US data, then we might see a directional move. Otherwise, we expect it to trade in this range. And after the FOMC meeting, there is a possibility the bulls might get an edge after the forward guidance by the Fed. In case of silver, silver has once again moved about $25, but it has not sustained, making it slightly vulnerable to profit taking. But we expect the profit taking might be at the max till $24.50 on the lower side. And on the higher side, as I mentioned, if it sustains about 25, then we might see a target of 26 very soon, as indicated by the harmonic bullish pattern that we have mentioned in our last week's podcast. Coming to energies, WTI crude futures touched $77 per barrel on Friday, its highest level in 12 weeks, as investors continue to assess the outlook for the oil market in the second half of the year. Oil prices found support earlier in the week after China's top economic planner pledged on Tuesday to roll out policies to restore and expand consumption in the world's top crude importer. Decline in Russia's seaborne crude flows to a 6-month low in the 4 weeks to July 16th. Decline in stockpiles at the storage hub at Cushing, Oklahoma by most since October 2021, coupled with Saudi's production cut, have all helped WTI crude prices to hold above $76 a barrel. On the price front, crude is at an important juncture as it is trading close to the falling trendline resistance near $77.50 per barrel. Sustained closing above 77.50 per barrel would give the bulls the edge to take the price higher towards the next resistance of 79.50 per barrel. So this would be kind of a pick of the week. If it sustains above 77.50 per barrel, we might see a sustained up move in crude prices. Finally, coming to the metals pack, LME base metal sharply retreated from higher levels earlier in the previous week following disappointing Chinese economic recovery and fresh signs of trouble in China's real estate market. However, weekly decline was limited amid China's vow to boost consumption, treat private companies the same as state-owned enterprises to bolster corporate confidence, and reports of easing home buying restrictions that provided some respite. Markets are now expecting additional stimulus measures from China, and this has, as the recent data releases have sparked concerns of China missing its 2023 growth target of 5%, already lowest in decades. This might be supportive for base metals in the week. On the technical front, zinc is still holding the support level that we mentioned. It is holding the support of 204.85, which is the bullish engulfing pattern low. So on weekly charts, zinc is still not looking very weak. We might see a rebound anytime. In case of copper, copper might take support near 712, which is the 60-day moving average. Below that only it looks very weak. Otherwise, we expect the price to trade between 740 to 710 in this week. To conclude, it will be a busy week in US as the spotlight would be on Fed's interest rate decision. Although Fed is widely expected to announce a 25 bips rate hike, forward guidance would be interesting to watch for. Additionally, markets may cautiously watch US advanced GDP and core PCE data to better gauge monetary policy outlook and set expectations for September. Moreover, investors will closely follow the interest rate decisions from the ECB and the Bank of Japan, as well as inflation rates for Germany, France, Spain, and Australia. Finally, flash manufacturing PMI from EU, UK, and US will drop earliest hints on the factory activity in July. Well, that's all for this edition of Commodity Podcast. Good luck and trade safe.